What up guys, in this video we're going to be talking about USD Swiss franc, and once again I'm going to do a quick disclaimer like I do in all the videos and just let you guys know that this is purely for educational purposes only. Talk to your financial advisor before you actually make any investing decisions. This is purely just my personal outlook on the market and our team's outlook on the market. It doesn't mean it is correct or incorrect, so take everything I say with a grain of salt. That being said, we could go straight into it. This is not financial advice. So we're looking at USD Swiss franc here, and we're gonna go to a weekly time frame. I'm gonna show you a pattern that I've been seeing, and this is a harmonics pattern, pretty much a Gartley at this point. And so we got a harmonics pattern here, and it's kind of forming a Gartley pattern. And let's take a look at the magnet tool with a line chart, or other way around, line chart with a magnet tool, and look at potential areas of support and resistance. And these will also be targets. So with these particular patterns, we have a high probability of making it to the neckline of these particular patterns. So that can be our first target. We're already in on this trade anyways, so we're already heading towards that target as we speak. And you can see that the candle closed above this weekly support area, which is another indication of it being a high probability to hit this neckline at the very minimum. And this neckline was actually support 3 times. It was tested once and then twice on the second candle. But let's go down to a daily time frame and kind of see what we're looking at with price here. We're going to take another Fibonacci retracement tool, and I'll show you where we're at right now with this particular trade. So we're taking it to the neckline, and that is about a 2-to-1 risk to reward ratio, which is okay. I preferably like to be in a 3-to-1 risk reward ratio, but if we can get close to a 2, that is also good and acceptable for us. And what we're looking for on structure on the 4-hour, once again, are these higher highs and higher lows. And we want to make sure that we're testing a structural zone so that we can run risk-free. So we have one more area of structure that we need to test before we actually can go about running this trade risk-free. What that basically means is moving our stop loss to break even or a little bit above break even to cover commission and swap charges. So we can see support, then resistance with some consolidation a little bit to the left at this 50% threshold, which is in confluence with that weekly support line as well. So we just have a lot of confluence for why this trade will hit the neckline. First, we got that pattern on the weekly time frame. That's the neckline. It usually hits the neckline. We have confluence with the 50% Fibonacci, and we have more confluence with structure on the daily time frame as well. So that's the trade that we are in currently. And once we hit that area, we have the possibility for doing a short. But once again, we want to monitor price at that area before we actually make a decision. We don't want to be predictive. We want to be reactive and responsive to the market and what it does. So I'll show you a quick scenario of what that would look like. Because once again, we have an impulse to the downside. So we already broke structure once. We have a higher probability of it after reaching a correction, making another impulse to the downside. And we can look at our first target, and I'll show you what that would look like if it does happen to hit that point and reverse from there. Once again, we're predicting the market here. So this is a potential scenario. Anyways, that's pretty much it for this video, guys. I appreciate you guys. Hopefully this was valuable, entertaining as well. See you guys on the next video. Bye.